We're going to review the freeandclear.com interest-only mortgage qualification calculator. The interest-only mortgage qualification calculator allows you to determine what size interest-only loan you qualify for based upon your monthly net income and debt. To find the interest-only mortgage qualification calculator, simply click on the Mortgage Calculators tab on the top left of any page on freeandclear.com, and that'll take you to a list of all the calculators available on Free and Clear. The interest-only mortgage qualification calculator is listed under Home Purchase Mortgage Calculators, and if you click on the triangle to the right of the calculator title, it reveals a brief description of the calculator. I'm going to go ahead and click on the link, and that'll take us to the calculator page. As you can see from the way the page is laid out, the inputs to the calculator are on the left-hand side of the page, and the outputs to the calculator are on the right-hand side of the page. The inputs are the information that you provide or select, and the outputs are provided by the calculator after you click the calculate button. I'm going to walk through each of them one by one. It's important to highlight that if you ever have a question about an input, you can hover your cursor over the icon to the left of any input rectangle, and it reveals a brief description of the input and the information required. The first input is how often are you paid. If you click on the drop-down menu, it reveals a range of options from weekly to annual salary, including bi-weekly if you're paid every 2 weeks, and semi-monthly if you're paid twice a month. I'm going to select monthly. The next input is the net income per pay period. So in this case, this is our net income per month. It's important to emphasize that this is our net income, so our income after deductions such as taxes, Social Security, and Medicare. So it's basically our take-home pay. I'm going to say that our net income is $5,500. The next input is total monthly debt. This is any monthly debt such as a auto payment, credit card payment, or student loan. Any revolving debt that you pay on a monthly basis is included in this figure. I'm going to say our monthly debt is $475. The final input is the interest-only period interest rate. With an interest-only loan, the interest rate is fixed for an initial period of time, usually 3, 5, 7, or 10 years. During this initial time period, which is called the interest-only period, the borrower only pays interest on the mortgage and not principal, which means that the mortgage balance does not get paid down. I'm going to select 4% for our interest-only interest rate. We've provided all of our inputs. You click the calculate button, and it produces our outputs. The first output is the estimated interest-only mortgage amount for which you qualify. It's important to highlight that a borrower can qualify for a larger loan amount with an interest-only loan than they can with other loan types, such as a fixed-rate mortgage that require the borrower to pay both interest and principal over the life of the loan. The ability to qualify for a larger loan amount is one of the key benefits of an interest-only mortgage. The second output is the estimated interest-only period monthly mortgage payment. So this is our monthly mortgage payment during that initial interest-only period where the interest rate is fixed. So the first 3, 5, 7, or 10 years of the loan typically. The next output is the estimated monthly property tax and homeowners insurance expense. Please note that property insurance rates and property tax rates vary by county and by state, so check with your local service providers to determine the values for these figures in your area. The next output is estimated total monthly housing expense, and this represents your monthly mortgage payment plus your property tax and homeowners insurance expense. This represents the total all-in cost of owning the property. The final output is the principal mortgage balance at the end of the interest-only period. We include this because it demonstrates that you don't pay your mortgage down with an interest-only loan during the initial interest-only period. So our principal mortgage balance at the end of the interest-only period equals the mortgage amount that we had at the beginning of the period. One thing to note about the calculators is that you can change an input without having to refresh the page. So let's say I change the interest rate to 4.5% from 4%. We simply change the figure, click the calculate button, and the outputs refresh automatically, and we don't need to refresh the page. After you've evaluated the scenarios you want to review, you can click on the compare lenders button, and that'll take you to a page with interest rates and fees for lenders in your area. If you ever have a question about the interest-only mortgage qualification calculator or any other mortgage topic, you can always click on the Ask an Expert button at the top of any page on freeandclear.com. That'll take you to our Ask an Expert feature, which allows you to submit a question to the Free and Clear Mortgage Expert. The feature is free to use, and we never spam. Thank you for reviewing the Free and Clear interest-only mortgage qualification calculator.